Hello friends, new income tax rules 2026 will be effective from 1st April 2026. This video is extremely important to know what all changes being made in income tax. Apart from that, the new income tax act of 2025, what all provisions being made in that and why these provisions are very important in the present context. Apart from UPSC, these are very important to enhance your financial awareness as well as to comply with the tax regimes. So let's start the video. First of all, the biggest change, the new income tax act of 2025. If we talk about the old income tax act, that is of 1961, we have a new income tax act that is of 2025. The biggest objectives of this new income tax act is to make the whole income tax in a very simplified language. Earlier, the major issues in the income taxes were that people are not aware of the income tax words, especially terms, complex norms. Apart from that, they are not able to understand the basic meaning of the special provisions like exemptions, deductions, and all these things. So the objective of this new income tax act 2025 is to make these tax very simple. Second, removal of outdated provisions. When the income tax act was made in 1961, that was made according to the circumstance prevailing at that time. But as the time changes and with the new things arise in the financial domain, we have to make the changes according to the current times, so that this new income tax act replace all those outdated provisions. Third, to make the compliance easier. As we all know, tax to GDP ratio is extremely important for the overall growth, because GDP can be increased through two ways. One is through tax to GDP and another is through debt to GDP. The more the tax to GDP is there, the less the interest you need to pay on debt to GDP thing. And the fourth thing is reduce litigation. Many times we see, and we all know this, that income tax exemptions, deductions, extra amount, all these things were being pending in courts. So to reduce these litigation and all that, this new income tax act 2025 was made. So these all are the major objectives of this act. Now moving ahead, the first important change is introduction of tax year. Usually the people were very confused about the two terms. First is what is financial year and what is assessment year, and what is the difference between both of them. So whenever the people ask them, give the what is your tax income in the financial year or the assessment year, so they are not able to get it, like what is the financial year, assessment year, what is the difference between them. So now these two words were removed and there is a single word, that is tax year. So whatever the money you earn from 1st April 2026 onward, it will be computed under tax year. There is no financial year or assessment year as such now. Second, HRA changes, that is house rent allowances. Usually HRA is very important because the employer give this HRA to employees. Now earlier what used to happen, the people are evading the taxes through these HRA. They are showing the more that they are showing in the returns that they are paying more taxes, or even if they are not paying any money to their parents, they show that we are giving the rent to our parents and we are living in that house. So this HRA laws are being changed so that tax evasion should be stopped. So what are the changes? First of all, tax is exempted in HRA only with two conditions. First, you live in that rented house, and second, you actually pay that rent. That means rent payment is necessity and you need to show the rent receipts as well. So first of all, mandatory landlord PAN, that the PAN card of landlord is mandatory now. Generally, for the when the rent is high, let's say for example 1 lakh per year, the rent of the PAN card of landlord is mandatory. Second is you must provide landlord's PAN number to prevent fake rent claims. Then proof of rent payment is required. Now earlier what used to happen, people show in the income tax return that we are paying this much of rent and there are no attachment or no as such proofs is required there. But now the bank receipt and rent transfer or payment proof is mandatory under HRA norms. Moving ahead, you need to disclose the relationship status as well. That what is your relation with the landlord, that whether they are your parents or relative or stranger. And paying rent to parents is allowed, but fake arrangement will be caught. For example, if you are saying that I am paying the rent to my parents, but actually you are not paying the rent and you are just showing that thing in your returns, this is not allowed now. If you are paying the rent to your parents, that is allowed, but you need to show the rent receipts. Then the major change, metro cities 50% exemption now include 4 more cities. Earlier, this 50% exemption in rent amount is allowed only in Delhi, Mumbai, Chennai, and Kolkata. Now it is allowed in Bengaluru, Hyderabad, Pune, and Ahmedabad as well. Moving ahead, then there are certain other exemptions, like for example, children education. Before, old rules 100 rupees per month per child, now it is 3000 rupees per month per child. Hostel allowance, it is 300 per month per child, now it is 9000 per month per child. Free meal 50 rupees per meal, now it is 200 per meal. Gift non-cash 5000 per year, now it is 15000 per year. And overseas treatment tax free only if income is 2 lakh and that, so now it is for 8 lakh. So these all are the exemptions. This is just, you need to know what are the exemptions, but UPSC might not ask these questions. They'll just ask that children allowance and hostel allowance increased under the new income tax act. They will generally not ask these figures. They will just ask a statement that children allowance or hostel allowance increased in new income tax act. So they may ask a statement kind of a thing. Now the most important component in this new income tax rules, that is PAN rule change. Why PAN is mandatory? Because for high value transaction, there are the chances that people evade the taxes. So to make these high value transactions purely accounting and recording form, to maintain transparency and to improve accountability, we have the following changes. First, cash deposit. If total cash deposit is more than or equal to 10 lakh per year, PAN is required. Second, if vehicle is purchased with a value of more than 5 lakh rupees, then the PAN is required, even it is for car and high-ended bikes. Hotel or event payment. If payment is more than 1 lakh, including hotel stay or banquet booking or event like wedding, PAN is mandatory. Property transaction. If property value is more than 20 lakh, it applies to buyers and sellers both, that they need to show their PAN. The objective is to track black money, increase tax compliances, and link spending with income, and to prevent Benami transaction. This is regarding to PAN rule change. Now, share buyback transaction. This is again very important. What is buyback? When company purchases its own share when they feel that the market price of share is not according to their expectation and what they will desire from their share price. If they are not getting up to that mark, they usually buy the shares by themselves. So earlier, what used to happen, this buyback transaction is different perspective. Now under this buyback transaction, capital gain is imposed. So suppose if you purchase a share for 50 rupees and you sold that share to 8 and if you get the amount under buyback 80 rupees, then that 30 rupees is charged under capital gain. Earlier it is different game. Now if you are purchase it for 50 and you sell it through buyback for 80, 30 rupees is charged under buyback. Depending upon the holding of that share, it will be charged under short term or long term. Now, there is one more change. If the promoter himself buy the shares and that promoter is a corporate promoter, then in that case, the tax amount is 22%. And if it is a non-corporate promoter, it is 30%. Let's take a simple example. Suppose ABC company buy back the share of XYZ company, then in that case 22% is applicable. And if a promoter Ramesh wants to buy back the share of XYZ company, then in that case he need to pay a tax of 30%. And for other people, it is generally charged under the capital gain depending upon their holding. Moving ahead, securities transaction tax. What is STT? Whenever there is buying and selling of securities, STT is applicable. It is applicable on shares, futures, and option. Now it is the limit is increased. Might be UPSC will not ask these facts, but they can ask that in a statement. Securities transaction tax regarding question. It is imposed on buying and selling. Recently, STT is increased. The objective is to make trading income more expensive or to enhance government revenue. So this is right the thing. So for future, the STT is 0.05% and for option it is 0.15%. This is impacting the high frequency traders more. Then moving ahead, sovereign gold bond tax changes. What is sovereign gold bond? RBI want that the people should, RBI and government both want that the people should, rather than investing in buying the physical gold, they should buy these bonds. So what is this under the sovereign gold bond? The old norm says on maturity, no capital gain tax is imposed and they are completely tax-free profit. Now the same rules are little bit changed in the new rules. If whenever the bonds are issued and if you apply during that issue, then the capital gain tax is exempted. But if you purchase these sovereign gold bond through secondary market, then in that case the capital gain tax is applicable. So why government changed this? To encourage primary subscription, to reduce speculation, and to improve stability of gold investment system. Then, regarding to dividend and mutual fund, usually people, what earlier they used to do, they take a loan. From that loan, they are purchase a particular mutual fund, and in that case, whatever, or mutual fund or any share, and whatever the income they will receive through dividend, they subtract the interest expenses from that. Let's take a simple example. Suppose you receive a dividend of 1 lakh rupees and you paid a interest of 30,000 rupees on a loan. For that you purchase that dividend, the effective tax is 70,000, that is 1 lakh minus 30,000. But under the new norms, even if you are taking any loan, and from that loan if you purchase any shares, and from that share if you receive any dividend, whole dividend is taxable. You need not allow, it's not allowed to subtract the interest expenses from that. Apart from that, other simplification, single declaration for non-deduction of TDS. So earlier, whenever there is any kind of deduction in TDS, or whenever there is non-deduction of TDS, you used to file different forms. मतलब जब आप TDS को फाइल करते, TDS के लिए आप ये फाइल कर रहे हैं, भाई हमें TDS डिडक्ट ना करें, तो उसके लिए अलग अलग फॉर्म पहले फाइल होते थे. बट अब यहाँ पर क्या हो गया है, यहाँ पर TDS को लेकर सिंपल सा एक रूल है कि एक ही आप डिक्लेरेशन फाइल कर सकते हो, चाहे आप किसी भी चीज को खरीद रहे हो. Then, simplified TDS on property purchase from NRI. You can deduct TDS using your PAN only. That means no need for TAN. Simple compliances. So if there is any property purchase from NRI, it can be deducted directly. TDS is deducted directly from PAN. No need for separate TAN. Revised return. If suppose you need to revise your income tax return, the extended time period is 12 months. That means in 12 months you can file the revised return. This is again give a little bit of leverage to the taxpayers to file the revised returns. Apart from that, TCS rationalization. What is TCS? TCS is collected at the time when the transaction is made between the seller and buyer. If seller is selling some goods to buyer, and in that case the buyer will collect TCS from seller, the objective is that to reduce the tax evasion. Now in this case, what is the changes? If you are booking any overseas tour package, then earlier the tax rates are different for TCS, but now it is flat 2%. Apart from that, if you are sending money in abroad to your ward, or to any student who is studying abroad, or to for any patient who is there in outside, in that case also the rate is flat to TCS, that is 2%. For alcohol, scrap and minerals, it increased to 2%. Earlier it was 1% only. The objective is that government want to increase the tax monitoring in these particular sectors. Then motor accident compensation. I'll explain you through a simple example. Suppose a person met with an accident, and the family member or he himself, he died, for example, in that case, and if his family members want to appeal in motor accident claim tribunal, then they receive the compensation. If suppose they are receiving a compensation of 10 lakh, and because of some delay they are also receiving an interest of 50,000, so the total amount is 10 lakh 50,000. Earlier what used to happen, on that interest amount of 50,000, TDS is applicable, and the interest that they are receiving, that is also taxable. Now under the new regime, whole 10 lakh 50,000 is tax free. Remember this thing, 10 lakh 50,000 is just an example. So earlier the interest that they received is taxable and TDS is applicable on them, but now that interest is not taxable and the complete amount is tax free. The objective is to get that family or victim will get the full compensation, and it also reduce financial burden during hardship. Then the most important, and that is more in I hope that you have a special interest on this, regarding to credit card rules. So if any high value transaction is reported, suppose you from the credit card you are making a payment of 10 lakh or more in a financial year, then in that case the bank of yours will report it to the income tax department that this particular credit card number holder or credit card holder is spending 10 lakh or more for non-cash payments. And if for whatever that you had purchased, if the amount of money that you are paying that is 1 lakh or more in cash. Suppose there is a person, that is Rahul. He is using his credit card and buying the things from Amazon, Flipkart, Myntra, whatever, and he's paying an amount of 10 lakh or more buying through credit card. The bank of Rahul will inform it to income tax department, and whenever the Rahul pay the money for the credit card payments, and if he made a payment of more than 1 lakh in cash, then also the bank will report it to income tax departments. PAN is now mandatory. If you want to apply for credit card, PAN is mandatory now. Apart from that, there is one special point. Last 3 months credit card transactions or last 3 months credit card statement can be a valid address proof for PAN application. Then whatever the credit card data will be, credit card data will be reflected in annual information statement and form 26 AS, now updated version. So updated 26 AS is now form 168, although so there is changes in the forms as well. Form 16 is now 130, that is very important form. Form 16A is now form 131. Form 12BB is now form 124, and form 26 AS is now form 168, and these are applicable from 26-27 onwards. So guys, this is what the changes in new income tax rules. I hope you all understand this, and I hope you all get a good knowledge of that. If you all liked it, please share the channel, please subscribe, and apart from that, mention in the comment as well. Thank you and God bless you all.